Okay, good morning. It's 11 o'clock already. I think we can make a start now. We've got 20 participants online already. We're having some time for questions in the end of the presentation. So I'm introducing Dave now. Dave is the Chief Executive of Castalia. He's the leader of the World Bank's Technical Secretariats on performance-based contracts. And let me read the rest here. I'm sorry, it's not here. I don't know what's happening here. I'm sorry.
Well, I can introduce myself.
I guess it's here now. You have over 20 years of experience in advising on utility sector development, private sector participation, project financing, public-private partnership contracts development and transactions, and infrastructure regulations. Is that correct, Dave?
Yes, that's absolutely right. Well, thank you so much for the introduction, and thanks to Julian and of course to Gary and Stuart, who have set up this webinar series on water loss reduction. Great way to spend our time and stay in touch while many of us are staying at home. And I'm really pleased to be able to talk to you today about, sorry, I'll just get the controls here, about private finance for non-revenue water reduction performance-based contracts, and to put it in the perspective of COVID-19 pandemic, and how can NRW reduction and specifically performance-based contracts that are privately financed be part of a response to this pandemic. I guess we've got a lot of people on the webinar who are really expert in various aspects of non-revenue water reduction. And so I'm looking forward to hearing the comments and questions and everyone else's contributions. This is really a fairly brief framework to stimulate that conversation, get us thinking about some of these things. So I thought it's just worth spelling out how the unique times that we're in now with this COVID-19 pandemic will affect the demand for performance-based non-revenue water reduction contracts, and also the supply of finance to those contracts, and how to, and then that provides a perspective for private finance. So I guess we all are realizing that the water utilities are on the front line in the response to the pandemic, because we need hand washing as a way to stop the infection. So we need reliable water supply, and we also, as people stay at home, they have to have reliable water supply at home. And in fact, we were just hearing before how in some cities, as more people are staying at home, the pressure in the networks is changing. Pressure is falling in certain areas too low, so the network operators are having to respond to boost pressure in areas. So this is real. Many of us on this call will be experiencing just how important it is to have widely available, reliable water services in the fight against the infection. And that's now, while the focus is on the public health aspects. But we're also already feeling the economic aspects. And so many people are not working. The economy is going, after the epidemic subsides, the economy is going to be in bad shape. Unfortunately, a lot of businesses will have gone bust. A lot of people will be out of work. Governments are trying to manage that, but that will happen. And so part of the response, the economic response, when governments are organized, when it's possible to work, will be a stimulus package, and it's a good idea to have fiscal stimulus going on infrastructure, because you're creating work, creating the flow of income in the economy, and you're getting something of long-term value. But we've learned from the global financial crisis in 2008 that so-called shovel-ready projects are often not shovel-ready, may take years to implement, and may not have a strong stimulus effect. When we think about the infrastructure projects that we want to boost the economy, we can say they should use mostly local resources, they should be labor intensive, they should be widely spread around the country because all parts of most countries will benefit from the stimulus. And so it follows from all of this that non-revenue water reduction projects will be in demand, especially if we let people know of their value, because they're often the fastest, most effective way to improve water supply. They're labor intensive, and they can be implemented quite quickly with local resources in many towns in many countries. So there's going to be, I think, a role for NRW reduction projects, performance-based contracts in particular, in helping utilities and governments to make sure the water supply is available to reduce the rate of infection and to do capital works to stimulate the economy. But again, those of us who work with water utilities know that they're always short of money. There's never enough money for maintenance, let alone capital projects for most utilities. And it's going to get worse because of the pandemic, because as we're seeing, customers are losing their jobs or being put on half-time, this kind of thing. They don't have the money to pay all of their bills. And so utility bills will be one of the things that go unpaid. And of course, utilities won't want to, and most governments won't let them disconnect customers during a pandemic. So a key mechanism to enforce payment will not be there. So from this, we can expect that utilities will be experiencing a reduction in their cash receipts. And unfortunately, the same is true for government, because the economic downturn means lower taxes for governments, while at the same time, the fiscal demands of the pandemic for health and social spending increase. So governments are going to come out of this pandemic in a much worse fiscal situation than they went into it. And many of the countries in which we work, the fiscal situation wasn't that good to start with. So donors will lend, but donor resources will not be adequate for all of the infrastructure stimulus that is needed. So at the same time as there's a demand for more NRW reduction and performance-based contracts, the availability of traditional sources of finance for those contracts will be reduced. Which makes it even more important to find other ways of financing them. And what some people don't realize is that NRW performance-based contracts can be privately financed. So some of us on this call are probably doing this, and to you it's not news at all, but many people are surprised at this idea because they're used to NRW reduction schemes being paid for from loans, for example, taken out by the utility. So I'd be interested in other people's experience, but NRW reduction projects that we have modeled and analyzed have very good rates of return. So they often have an internal financial rate of return of over 20%, which is kind of what you need for private finance. And many of them are well above that. We've seen numbers of 50%, 90% rates of return. So many of these contracts should be financially attractive. They also often have payback periods of less than 2 years. Of course, it depends on the project and the starting situation. But where they are financially viable, in other words, have a financial rate of return in excess of the private sector cost of finance, then they're attractive to private financiers. And the way I believe to think about this in the water sector is, we know that water treatment plants have been financed as public-private partnerships or BOOTs for decades now, and that structure works. And for a well-structured water treatment project, there's plenty of private equity investors and banks ready to invest equity, banks that are ready to lend. That same model can be adapted to non-revenue water reduction PBCs. And I want to take you through the elements that are in place to make that happen. So there's a financial structure that we can adapt from water treatment plants. There's model contracts and contracting tools that have been developed by international agencies. There's a lot of service providers ready to be the private side in this contract. Regulators have tools to support the contracts. And so with all of that, I think it's possible to make private finance work, and I'll take you through all of those elements. So the structure, for anyone who's familiar with project finance, this is a very familiar diagram. For others, maybe I'll just explain it step by step. So what we're imagining, of course, at the bottom of the diagram, we have the customers, and the customers are being supplied by a utility as usual. The utility is providing the water service, the customers are paying the utility the tariffs. And this utility has entered a performance-based contract, that's the red arrow, and for non-revenue water reduction. But instead of just signing a contract directly with a specialist that knows how to reduce NRW but is not providing the finance, because this is going to be privately financed, a special purpose vehicle, an SPV, is created. All that means is the contractor creates a separate company to implement this contract. And that's the way of structuring the finance. The utility signs the contract with the special purpose vehicle, which we've called non-revenue water reduction company. And that means that special purpose vehicle is going to, of course, get the performance-based payments as it achieves the NRW reduction objectives. So there's a revenue stream here that can be predicted if you can predict the success that you'll have on the contract. And the idea is to get this company to pay for the capital works, so that this company will front the money for creation of DMAs and for replacement of mains, replacement of connections, whatever the capital works, as well as the working capital for paying staff is needed. We want that to be privately financed. So it means that those works are actually being paid for by the NRW reduction company. So where does it get the money from? Because a lot of companies that specialize in reducing NRW don't have enough money to put at risk in actually funding the capital expenditure on the projects. So I think those companies would be expected to put in some of the equity. There's other equity investors, private equity funds like Meridiam, for example, the French private equity fund, and many others that are interested in and willing to invest in this kind of contract if it's well structured and if it's of a large enough size to be of interest to them. There's also development agencies like IDB Invest, the International Finance Corporation, that would be interested in investing equity in such a company, possibly. And in addition to the equity, there's debt. So this is going to a bank and showing the bank the cash flows that are expected and asking them to lend. Now, some people might think this is not possible. Others on this webinar are probably doing it right now. And certainly when we've been working on this in Jamaica and other islands in the Caribbean, and what we find there is that banks have been very eager to lend into structures like this. So there is a supply of finance available once everything is well specified and well documented, using models that are based on the models that we use in privately financed water treatment plants. And you probably might be thinking, well, but what if the utility can't pay? So that would be a big risk to anyone providing private finance. There's an answer to that, which is an escrow agreement. So if you're worried about the credit worthiness of the utility, then you create a revenue escrow account where the customer's payments go into a special bank account, and the bank is instructed by the utility from the special bank account, the first thing to do is pay what we owe under the performance-based contract with the NRW reduction company, and after that, provide the money to us, the utility. Now, of course, utilities are not happy to lose that financial flexibility, but if they really do intend to pay on the performance-based contract, then this isn't costing them anything. They were going to pay that money anyway. It's just a way of making it clear to the investors that they are committed to paying because they're giving the control of money to a separate party, the bank, the escrow agent, that will ensure that the contractor gets the money. So again, this is something that's used in project finance quite frequently, and it's a way of allowing the structure to work even where the utility itself may not be creditworthy. So there's some other pieces in place that can help make this happen. The World Bank has been promoting performance-based non-revenue water reduction contracts. They set up a technical secretariat, which we led to develop tools to make these contracts easy. There's a standard contractual model that's been developed. So again, for any utility that isn't very familiar with this, there's a lot of help now, advice on how to get such contracts set up quite quickly and cleanly. And there's a lot of companies that are good at doing non-revenue water reduction on a performance basis. Many of them are interested in this privately financed approach, are familiar with private finance. So here's just a selection. If there's others that should be on this list but aren't, please let me know. We'd love to add you to the list because we're kind of trying to keep track of who are the main people doing this. But lots of good experience in the Americas to draw on here. And of course, Julian Thornton, who's co-hosting this, being one of the names on that list. Regulators also have a role to play. So I think regulators should look at performance-based non-revenue water reduction contracts as a way for many utilities, one of the best ways to help the utility become more efficient, lower cost, provide better service. Regulators will also need to be looking at how they help utilities get through this this COVID-19 pandemic and continue to provide service while remaining financially viable. So we've hoped in many countries to see regulators thinking about what they need to do differently now with water utilities. And we hope, it's certainly an option for them to provide regulatory support to NRW reduction PBCs, including those that are privately financed, as they have in the UK in the past, in Manila. And in Jamaica, I just want to mention something unique about Jamaica's approach. Jamaica, in Jamaica, the Office of Utilities Regulation set up what they call the K factor, which is a component in the bill, and that part of the bill may only be spent on efficiency improving projects. And non-revenue water reduction is one of the major beneficiaries of that because, shockingly enough, the National Water Commission in Jamaica has non-revenue water levels of about 70%. And so this works a bit like the escrow account I was talking about before, where that component of the money that is collected from customers for the K factor is paid into a special account, and the regulator supervises that account to make sure that it's only spent on the things it's meant to be spent on, including non-revenue water reduction contracts. And that stream of K factor money has been used as a security that's been pledged to assist with financing those contracts. So again, the point being that regulators can help to make this work and should have an interest. So in summary, and before handing it over to this, the great group that we've got here for a discussion, we think that performance-based contracts for non-revenue water have been a good idea for a long time, and they're an even better idea now because of the pandemic, because they're one of the fastest ways that you can improve water services, which we need in many countries to fight the infection. They're also one of the best infrastructure stimulus projects that are available, and we're going to be seeing a lot of infrastructure stimulus being sought. We want it to be spent on projects that are effective. NRW reduction projects fit that bill. And they help utilities to remain financially viable, which is extremely important given the cash downturn that the utilities will be seeing. So NRW PBCs will be good, but it will be best if we can make them privately financed, because utilities, given the expected reduction in their cash flows, won't have the money to finance them. Governments will be in even tougher fiscal positions, so they'll struggle to put together enough infrastructure stimulus money. So in a way, if we don't get the private finance, we just won't have enough finance. The good news is that private finance can work, because we can adopt successful models that have been used for decades in the water sector for funding water treatment plants. We can also learn from the energy efficiency sector, the ESCO model, which has seen performance-based and sometimes privately financed reduction in energy wastage, also provides a suitable model. And drawing on these models and others, international agencies like the World Bank have developed some really useful tools. There's a wide range of service providers in the market now that know how to do these contracts. We can expect regulatory support. We've got examples of what that looks like. And there are financiers that are looking for investment with good returns, and especially good returns that also have a social return and provide resilience. So I think if we work together on this, we can really make privately financed NRW reduction contracts work as part of the COVID-19 response. And with that, I'll open it up to questions and discussion.
Okay, thank you, Dave. Do you hear me?
Yes.
Thank you for that. Any questions, comments? I'm opening the chat here. If anyone has any questions, please use the chat window. You can find it in the lower part of your video. Just waiting for the questions and comments and whatever. We are getting some questions here, Dave. Let's just wait for a minute.
Yeah, sure. And I see that. Thanks very much to Brad from WRP Consulting, who mentions that they're a company in SADC that does performance-based contracts. That's great to know. We'll add you to the list.
I've got some texts here also asking for you to put the name on it. I can send it to you later. Julian Thornton is asking here, Dave, do you see a large difference in capacity from country to country in available local contractors?
Well, I think so. Thanks, Julian. And I'd really love for others, because we do have a great selection of people from all around the world here. I'd love for others to chime in, but we're working in Mozambique now. Julian, you're in Brazil, and we were talking about in Brazil as there's your company and other companies, and a very mature market of NRW performance-based contracts. And so in Brazil, local companies can respond easily to these contracts. And if there was a stimulus package, it would be great because you wouldn't have to fly in international experts. There wouldn't be a long time spent on creating contracts. And all the money would go to people in Brazil, which is what you really want for an economic stimulus. I think in Mozambique, there's much less local experience. And so I'm not sure, but it seems that it might be hard to get the same kind of local response in Mozambique as you would get in Brazil. So I think that will be an important difference, especially as to how quickly countries could turn to using NRW PBCs as COVID-19 response.
Okay. Next one is Stuart Hamilton. What do you think the time scale will be to start these PBCs, pressure-based contracts?
Right. Really good question on the timescale, and maybe I should actually ask others that question. Julian and I were discussing it just before the session. So what I would love to see would be, on the one hand, countries like Brazil that have a lot of experience, know how to do these things, moving quickly, using their own expertise and resources. And how quickly can that go? Can that be done in 1 or 2 months so that we can actually get more water in the system, more pressure in the system during the period of the infection? So I'll pass that question back to the floor. I think what I'd also love to see would be, as international agencies like the World Bank, Inter-American Development Bank put together their COVID-19 response packages, they're going to, I know those agencies are thinking about how do we keep water utilities financially sound during this pandemic, and also what does the infrastructure stimulus look like afterwards. I would really love it if the sort of highly motivated, passionate people in those agencies could move a lot faster than usual, and perhaps within just a few months have a standardized package on offer to their clients to help support countries that, unlike Brazil, don't have a long experience in this, but see the sense of doing NRW PBCs, help support those countries to bid them out using some of the expedited methods that were developed by the World Bank through that Secretariat on NRW PBCs.
Okay, next one.
But please, if you have answers to the questions that I've thrown back, like how long will this take, what should we be doing, type them in as well. We want to get some of the shared knowledge, because I think the people on this call know a lot of things that I don't know.
Next one, Joshua Bennett. In your opinion, what kind of privately owned companies do you expect to provide finance to projects such as these with the future economic climate coming? Yeah.
Yes, no, I get it. That's a great question, Joshua. I think that what you're probably alluding to is the fact that the economic climate is getting worse. And so while even if we could find people who would lend and invest before, will it perhaps be more difficult now? And so I'll take that in 2 parts. I mean, I think first, before COVID-19, we did see, we've talked to many investors that are interested in investing in this space. Now, there's private infrastructure funds, like Meridian, for example, and others, that are looking for this kind of investment. I mean, they have the money, they need to place it in infrastructure. They've got some allocations for particular economic areas and regions, in particular regions, including emerging markets. And for them, the projects have got to be big enough. So an NRW reduction contract with a total capex of $10 million is not interesting for them, because the equity would be less than $5 million. And the cost to them of organizing an investment is $1 million. So it doesn't make any sense. But they'll be interested in projects with large capital expenditure. At the other extreme, you know, we surveyed companies in Vietnam. Local companies in Vietnam are interested in providing small equity investments in this kind of contract. And then the banks, actually all over the world, banks have been interested in this. I mentioned the ones in the Caribbean. Similarly, in Vietnam, Vietnamese commercial banks want to lend to this kind of contract when it's well structured, when they have the credit enhancement mechanisms, which they know how to do. So next question would be, what about the impact of COVID-19 and its economic effects on their willingness to lend? And I think the reason I'm optimistic is that I think governments and international agencies are responding with pretty massive monetary stimulus as well. So there's going to be large amounts of money in the banking system, and banks and others will be looking for a place to put that money. There's not going to be a lot of well-structured projects around to absorb all of the money. And so if we do have well-structured projects then we structure the projects with the commercial banks in that country in mind, I think there's a good chance of getting the finance. I also expect that some of the private sector arms of international agencies like IDB Invest, like the International Finance Corporation, which is part of the World Bank, will be looking at how to support private companies investing in infrastructure. So that'll be another source of finance, I expect.
Okay, next one is a comment, it's not a question. The Middle East tends to prefer technical assistant contracts. Previous examples are Ehrhardt for Veolia, Jeddah for Suez, and Oman for Veolia. And now we have a question. I'm trying to manage our timing here, so I'm trying to...
I can actually see the questions as well, so I'll just pick up a couple of them if you like. So we've got that one.
Do you find the regulatory support we talked about exists in African countries and pressure-based contracts in Europe? And we have something here asking about small utilities. Is there any chance for them to implement PBCs in this new COVID-19 climate? I don't know this word.
Yeah, so that's great, thanks. So definitely true about what the Middle East preferred in the past. Now, what we're seeing in the Middle East is a lot more focus on efficiency and private finance than existed before, for one very simple reason: the oil price. And you know, that was happening with oil at $60 a barrel. It's happening even more now. So I guess I would just say, I hope that Middle Eastern governments continue to finance NRW PBCs, because there's some good efficiency gains there. And certainly if it's necessary to provide the water that people need to fight the infection, even more so. Many countries will only do privately financed NRW PBCs if they can't get the public finance, which I think is fine, because the public finance is a much easier way to do it. But you know, we're working in Oman, and the government of Oman is committed to privatizing its water sector, partly to try and get the fiscal cost of the water sector off the government's books. So things are changing. Is there regulatory support in African countries? I mean, Africa is a huge continent, of course. I don't think that at the moment there's regulatory support for this specific regulatory support for NRW PBCs in very many countries at all. But the models from the UK, from Manila, from Jamaica can be picked up by regulators in any country. Brad has made a comment about, is there a framework for a municipality to manage such a contract? And if not, is there an approved framework or documentation available that can be shared? And I mean, the answer is yes, there are, I would say, recommended frameworks and documentation that can be shared. And this is from the World Bank. I showed the slide briefly. I wonder if I can perhaps just share my screen again. So if you can see on this screen, there's a URL in the bottom right-hand side to the pppknowledgelab.org. That's a World Bank website. And that's where there's really quite a good collection of tools that include ideas on how municipalities can monitor and manage NRW PBCs. And what's also helpful is to get, for such municipalities, to get advisors on their side. And of course, they can simply go and hire advisors, but if they lack the money or the expertise to do that, then entities like the World Bank, IDB Invest, the IFC can help with that in various ways, because these contracts, and I recommend that because these contracts do work a lot better if the public side of the contract is supported with people who have the same level of expertise and knowledge as those on the private side of the contract do. Some great questions here as well. So is there a chance of small utilities, maybe supplying less than 10,000 people, to implement PBCs in this COVID climate? Can other people comment on that? Maybe people who are in the business of operating these PBCs, is that something that you see as possible? And the question of the fair split of savings between the client and the implementer, I don't think there's a single right answer to that one. It seems to me that, especially if it's privately financed, there's a certain amount of revenue that the implementer must get to service the finance and pay their costs. So it's not necessarily a case of a split. It might be, well, this is how much the implementer has to get in order to bring the finance. Now, of course, there should then be some additional gains after that, which presumably would go largely to the public side. But how to decide that is going to be case by case, I think.
I think we have some comments here from Julian and Stuart. They are saying that, Julian's saying that yes, it could be possible, especially if you can group small communities together. And Stuart Hamilton is saying that any size of project can become a project-based contract in reality. So I think they are complementing this. Anyone else? Just waiting for some more questions. Yeah.
I have a question for the group. I'm glad that some people are answering questions as well as asking them. Are any of you doing privately financed NRW PBCs, or have you done one in the relatively recent past? Because if so, it'd be interesting to share your experience.
Julian, you can help me out here, but if anyone wants to talk, it can activate the video and the sound. Julian is saying that I can discuss this. Actually, we have some performance-based contracts here in Brazil. Most of them are here in São Paulo. We've been working on performance-based contracts, I think, for 20 years now. Now, the northern part of Brazil, we do have some contracts over there too. So it's been working for a while here, and we don't have any problems on this financing subject, or the payments are really, I think some people were talking about the share. How do you pay for that, or how much do they have to pay for that? And we have different models here in Brazil. Some projects do have a share of the savings for a longer time contract, but some projects, it's kind of, they pay more for less time. I don't know if I'm being clear. Julian, help me out here. Is it working? Do you hear me? I think my internet connection is not really good today.
Can you hear me now?
Yeah, Julian, please.
Okay, now I was just going to add that I think it's important to note, and Melanie did allude to this, but in Brazil we've been doing performance-based contracts for a long time, and the local capacity and knowledge and regulation and the types and modalities of contracts has built over time. We haven't just suddenly, decided to do lots of performance-based contracts. So local capacity to be able to undertake these has also grown. I think that's one important thing. Melanie, now timeframes to get a performance-based contract started. Stuart had asked it, and I think other people asked it. How long do you think we go from inception to actually starting now? If somebody like Sebespi, who's doing a lot of performance-based contracts, what do you think the timeframe is for them to decide on an area and then actually be able to put the contract out on the street, and then the contractor win and be awarded the project and start? What do you think, maybe 8 months, 12 months?
At least 6 months.
6 months, okay.
So we have a lot of projects and everybody knows how to do it. I think it's 6 months. But in the beginning, it used to be like 8 or 10 months at least.
Mm-hmm. And as far as the question about a fair split of savings, and that's also always a difficult one. It depends on the contractor's interest. It depends on the utility's need. But I think probably the biggest driving force is, if the contractor was simply to take his money and put it in the bank, how much would he make? And what's the cost of financing? And the split for the contractor has got to be well in excess of what he could simply make in the bank or in a conservative fund or something, because if not, he's not going to risk his money putting it into the marketplace. So I think the answer is going to be very different in different markets. Where you've got very, very low bank rates, people are getting more stimulated to put more money into these kind of infrastructure projects. Where you're already in a situation where the interest rates are quite high, then for a small or a large contractor to invest in an infrastructure project like this, I think, and David, please feel free to chime in, but I think the split obviously has to be larger, and then it comes down to the case of, well, is it viable? Talking about what Melanie was just bringing up, just to finalise, and then I'll let David come back on with those thoughts. But what we have now in Brazil is we have contracts that may be limited to, say, a 5-year contract. But in reality, the capex benefit to the utility is much longer, maybe 15, 20, 30 years. So in Brazil, some of the modalities are 100% performance payment. So the contractors get paid by the volume saved of apparent loss or real loss, because there's quite a lot of capex involved in some of the PVCs now. We don't have necessarily always good infrastructure, and there's quite a lot of spending required. In order to be able to pay the contractor within a short time frame, then we have to sometimes charge more per cubic meter than the actual water is worth at this point. So we wouldn't, for example, repay a contractor at marginal real loss value, production value. We wouldn't necessarily pay them even at the retail value, because there's a longer term benefit to that contractor coming in and helping to finance the infrastructure required for the future, which of course is going to be a benefit on their books for a longer period of time. And David, I don't know if you want to come in and say something about that as well, in your experiences.
Well, thanks. That's great. I mean, I think it's really good to hear from people who are actually doing this, and to hear about the experience of Brazil as one of the most advanced markets here, and how the various methods that are being developed to get not just NRW PVCs, but privately financed NRW PVCs. And I think that when we hear times of initially 10 months, then now 6 months for competitively procured projects, I mean, it does suggest that hopefully that most countries will be on the tail end of the infection 6 or 10 months from now. So these projects, new projects, may therefore be more suitable for sort of future protection and for the infrastructure stimulus. But it does suggest that they can be got going fairly quickly, and a lot quicker than many other sort of stimulus projects could be. So I do think that utilities and governments all around the world, and I hope also development agencies, can pick up these ideas, pick up experience from all around the world, and particularly from Brazil, and see how we can use them as part of really getting value for money in COVID-19 stimulus, infrastructure stimulus, and have the end result be water utilities that are providing better services, more efficient, more financially viable than they were before the pandemic. It seems that we've had a good discussion, we've had a few good questions, but if there's not other questions, I would suggest that we could wrap it up now.
Mm-hmm. I think that's it. Thank you, everybody.
All right.
Say goodbye then.
Thanks, everybody. Bye. It's been a pleasure being with you.
Thank you, David. Bye-bye.
Bye,
Bye now.
people.